All right, so welcome back in. Today, we're going to dive into where the market is going. A lot has been happening. We've, of course, seen Bitcoin at a new place, and we're going to dive in a little deeper, of course, and dive in, I think, in a way that you guys are going to like. My name is Paul Barrow. Welcome back to Tech Path. Joining me today, of course, is no other than Rob from Digital Asset News. Great to have you back, man.
Hey, it's good to see that you're not in exile over on YouTube.
I felt so, I don't know if I felt very, I felt like I was in a very exclusive crowd that
Yeah,
had gone through that.
yeah, you are in that club, and it was you. Let's see, in the last, I want to say 6 months, it was you, Crypto Crow, it was Tony from Thinking Crypto, and that was the three. And then before that, there was a bunch of different ones, but that was like years ago. And it seems like YouTube kind of goes on this roll. And when
Yeah,
they do that, it's like your channel's just gone and you're helpless and
yeah,
you're at their
yeah.
mercy. And then unless you know some people that are really high up, then
You know,
you're just
couple
gonna
of,
stick
yeah,
stick with them.
couple of guys like you usually help out.
I try. I do
No,
my best.
well, you had BitBoy going down. He went down last fall, and then also Crypto Banner was taken off. So I mean,
Yeah.
we've seen this issue before. So it's, but hey, we're past that. Things are different now, and I think we're also looking at a different marketplace as well.
Mhm.
Let's get into the price of Bitcoin. Obviously, we have to address this upfront and personal, and that is, Rob, what are you doing now with a $35,000 Bitcoin on the door?
I'm crying my eyes out. No, see, so this is, of course, whenever people see this, of course, Russia just invaded the Ukraine. So there's a
Yeah.
lot of people who are unsure about what's going on, and
Hmm.
there's a lot of fear out there. So right now, everything is just plummeting. I don't know what the S&P 500 or Nasdaq did today. I'm just assuming it's
700 points
crashed.
yesterday. Yeah, 700
Yeah,
points. It's moving hard. Do you
yeah,
feel like this though, even though there has been to a certain extent a little bit of expectation around what the global situation might be and where crypto could play into this? Do you think any of that was priced in at all, or do you think this was a surprise to the market?
no, I think for the most part, a lot of people thought this might have been posturing and saber rattling, and there was going to be a de-escalation when
Hmm.
Putin got what he wanted to get. And I am not the guy to talk to about the global affairs of what's going on, but it seemed like that's what we thought was going to happen. Didn't happen.
Yeah.
And of course, now we're going to move forward, and it's going to be interesting to see how this chess match plays out because we know there's going to be a lot of sanctions against Russia. We just
Right.
heard that they want to cut Russia off from the SWIFT system, which,
Yep.
if you get cut off from the SWIFT system itself, that means
Oof.
you are out of banking altogether. However,
Yep.
it was an interesting thing that Russia just recently kind of fast tracked the whole process of
Yep.
legalizing crypto and digital
Crypto.
assets. I think that's
Yep.
one of the most interesting parts there.
Yeah, that concerns me a little bit because if you do see something where especially a situation like that with them, and I think any
Mhm.
any nation out there, if you see scenarios where there's limitations on either the SWIFT system or even to a certain extent, just in general, where global banking is kind of structured to help a lot of these countries, much like what we saw in El Salvador, with their a little bit of pressure with them legalizing Bitcoin. I think as we see more and more potential G8 countries moving in this direction, especially in the form of digital assets, in
Yeah.
my opinion, that starts to weaken our position here in the US, both from an investment class and also from just in general, a nation state, as we start to see the future of where digital assets are going to start to be a global economic, power center, because it's going to give a lot of people the ability to kind of go around the system, which is that's a big deal. That's a big deal.
It's a big deal, and we've been talking about this on the channel forever. And that is the fact that U.S. is falling behind, and
Yeah.
even I mean Biden and the people around him actually know it. That's why they said this is a national security issue, and
Hmm.
they're trying to pull people together, CFTC, the SEC, the OCC, the attorney generals, and get them to go. Look, we need to all come together and figure out a strategy here, because if not, we're going to get left behind. The only
Yeah.
reason that we're doing so well right now is because China dropped the ball and said, get all the Bitcoin miners, we need you to get out of here. And because of that, that is the one reason why
Yeah.
we're actually doing pretty well in Bitcoin mining, specifically in Texas. So, I mean, if it wasn't for China screwing up, I think we'd be way behind the eight ball.
Yeah. That's a good point. And when you look at where the market is going, adoption seems to be curving in. We just did a video yesterday on the Crypto.com report around merchant adoption potentially for utilizing cryptocurrency as a vehicle for transactions. And if we see that, and I was surprised at some of the data that was revealed in that report, and it was all leaning in to the fact that if we see businesses kind of going in this direction, obviously consumers in most cases will follow if they're not already leading in certain sectors. Some sectors, actually, consumers were kind of pulling the cart. Do you see that side of things helping sustain what we're dealing with right now in kind of this little bit of a bearish market that we seem to be facing?
You mean businesses adopting crypto and digital assets, that type of thing?
Yeah, just in general of the markets themselves starting to loosen up in the ability to utilize crypto in other ways than what we've been seeing in the past.
Yeah, I mean, I think there's been a lot of different companies that have embraced it. I mean, PayPal being one of the big ones, and then also letting their merchants. I think the more that you put it into the system and it becomes easy and simple, and I'm not talking about using your Ether wallet and connecting
Right.
to a DEX and trying to transfer it over to Polygon and something like that. Stuff that, people like you and I can do, but the average person's like, I got 2 jobs and I got 5 kids, and I don't have time to learn this stuff. I need to make it simple. So when we make it simple and we can adopt it and people get into it, sure, I can see that whole route. But right now, we need a lot more adoption and and really, in all honesty, some regulation clarity. So we know the rules, so we know how to get around them, and then a little bit better user interface so people can make this a little bit simpler.
Yeah, that is one thing that is a little bit of a stick in my side when I look at where technology has advanced over the last couple of decades. One of the big components, there are aspects of certain crypto projects, certain projects in general in blockchain that do a pretty good job with that, but there are a lot of them that are very clunky. They haven't been able to kind of, take it to the next level for UX, and definitely for what you're talking about in terms of, big mass adoption. That is going to be one of the keys, even though there's still some banks out there that have some pretty antiquated, mobile banking and even web banking applications, but most of them are coming from, 1980s and 1990s type tech that they're trying to just, band-aid and fix. So I definitely see that. But with Web3, don't you feel, or I should say, do you feel that we are in kind of this new threshold of a next evolution around technology advancements?
And here's the thing: these for Web3 to come about and actually be functional, we have to. There's a long way to go. And if you take a look at it, if you take a look at between Web 1, Web 2, and Web 3, Web 1 was really decentralized. I mean, you didn't have all these massive Google servers. You didn't have these massive data centers. It was just people just hosting things on it, or just small little areas. So it was really a decentralized platform. Then you go to Web 2.0, and now you have all these massive data centers, and of course, we know the problems with that. Data collection, they can keep all the information that they want to. There's also your personal information leaks and such. And of course, then you get monetized because you are the product. And now we're moving into Web3, and we're trying to figure out how to do that in the best way possible, and actually to decentralize that, and actually have things, NFTs, using the blockchain and moving forward. Right now, that whole process, I think, is just underway. And again, going back to the thing you talked about, as far as like making it simple and getting into like Metaverse plays and stuff like that, we're a long way away, I think, from actually getting to where we need to be, to where we have people, like my parents, that can actually navigate these things, or people's parents and grandparents navigate it. Because right now, it's just, I don't think it's really just there.
Well, I would kind of push back on that in a sense. And the reason I say that is when you look back at the history of technology adoption, and even if you look at the mid-90s, the one thing that was very intriguing about that, let's just take 1997. I was living in California working with Microsoft. We were pretty much on the forefront of what was happening in Web 1 and the convergence to Web 2. But the one thing that did start to happen was there was layers of uptake. And what I mean by that, it's the early adopters, which I feel like are the crypto crowd today. They're guys like you and me and many of the people that we run within circles. That's the early adopters, but it's not the next layer generation adopters who are capable of doing this, that are a large percentage of what the next big leap is, because those are the ones that caused that Metcalfe effect or that trickle up effect of big mass adoption. And we saw that in 97 through 99 with the dot bomb. And then by 2001, that was when kind of the normies came on to trusting a website with your credit card, even understanding e-commerce and what that might be in the future. So the acceleration, I think if we can maybe get this next tier of people, especially that are kind of crypto curious right now, they just haven't made the leap. And I think there's a lot of them out there because I get so many questions. How about you? Do you get a lot of questions coming in, or is it people kind of look at you when you start talking about crypto sideways?
This is what the majority of it comes down to. How can I make some money? That's really what that's really where it all starts with. Hey, what crypto should I get into that will make me, filthy rich? And I was like, well, I mean, just pick your poison. There's a ton of them out there. But I mean, you're always going to get those types of questions. I always tell people like this, like there's going to be those Dogecoin millionaires. There's going to be these people out there that just kind of just plunk down a bunch of money and get lucky. But in all honesty, if you want to be in crypto and digital assets, it's going to take a little bit longer. I always talk about a 4 or 5 year plan. Just stick around. If you don't like the price of your crypto right now, just wait. It's like rain in Puerto Rico. If you don't like it, just wait a couple minutes. It'll definitely change. So I keep getting the same questions. What do I get into? But the real question really comes down to what can crypto do as far as utility and a use case, not just what can make you rich. That's, I think, is the bigger question, and what will probably lead people to the better projects.
Yeah, I think that's where NFTs are really going to play a big role in this. We've seen this, obviously, the early stages of what both, gaming, metaverse, and obviously the traditional NFTs that are more the static JPEGs. I think a lot of people are now opening their eyes up to what real utility is in an NFT, and yet have not yet seen the real use case scenarios. We're studying a lot of different markets that are starting to move into this in the retail sector, the restaurant industry, medical, real estate, that are starting to use these as more instruments. And I think once that starts to scale and we do get some good use case, performances, people showing, hey, this is a good, case study of how it worked for us, what we were able to do with it, how it helped our business or whatever it might have done. I think that will open up the eyes of a lot of people, very much like social media did in 2007. So social media was the same way. People were looking at Facebook and Twitter and were all questioning whether or not they should have one. And by 2008, 2009, Twitter and Facebook, of course, just exploded. And that was that early adoption phase was, what's the purpose of it? Why do I need it? I have email, I'm fine with it, And of course, now we understand how, social communication works, and it's kind of changed the face of our planet. When you look at the current market as it is right now, whether it's altcoins, metaverse, the blue chips in cryptocurrency with Bitcoin and Ethereum, do you think this is a bit of a window here? I was listening to Benjamin Cowan a little bit. I know you guys are on with Ben each week. What are your thoughts on whether this is a 1 quarter, 2 quarter? Do we see some relief on where these markets are this year?
If it wasn't today, if it was yesterday, 24 hours ago, I would have said, I would have said there's probably some relief coming around the corner, because you just had the Fed in their emergency meeting. And they said, we're going to raise it either, a quarter or a half basis points. Okay, got it. Then, the earnings call came out and we're okay with that. And now we're going to get into potentially the buyback programs for all the different corporations. So, okay, that'll probably help us out pretty well in the traditional finance. So you take a look at, well, where else could they potentially go? I always thought, well, crypto and digital asset would be a pretty safe bet, especially with the rails that are being laid down. So I'm like, this makes a lot of sense. Maybe Q2, maybe even Q3, but I kind of see where things are going. You can kind of tell that institutions were pretty much, ruling the roost. And even Coinbase put out a report that said just how big institutions were coming in. Now, with what's going on globally, I think it's going to spook a lot of people. I don't know if they're going to be like, I don't know if they're going to be like, we know crypto is going to be big. We know digital assets will be big. Do I want to put it in this type of very volatile asset? or do I want to be a little bit safer right now? And I think that's the big question for the investors. If you're an investor who's looking down the road for like 2-3 months, crypto is not going to work for you for a while. I think if you're looking for the longevity, for the biggest asymmetrical bet, I think crypto and digital assets, specifically the safer ones like a Bitcoin, like an Ethereum, like a Chainlink, those types of things, you're probably a little bit safer than going else somewhere out to like coin number 9,000 because you think it's going to go up to $1 billion. So I only think it works like that if you can see the value in the long term, just like ARK Investment does with some of their plays when they're talking about traditional equities.
I was looking at your cash out plan, and I'll bring this up on screen just to kind of give people a look. So you've got IRAs in there, you've got some cash in there, you got a lot in stable coins. You're looking a little bit in some, you're tinkering around with some art. I like that. Getting into some land. You've got this whole aspect of Amazon, which is, the traditional stock. And then you've got an array of altcoins in there. This is a good flexible portfolio. I like this alignment.
Yeah, I want to de-risk myself a little bit. And so I figured that at some point, there's the opportunity to get out of crypto just a little bit and kind of put yourself into other assets. And I think that's kind of just to reorganize or reshuffle. When is that? Well, I can't tell anybody where that is, but for me, sure, it's in different points along the way. So like 25% of stable coins, well, why is that? Well, it's because, like, in all honesty, if I cash out and put it in the bank, what's that going to do for me?
Yeah.
There's a inflation rate, 7%, or if you believe that, I think it's actually much higher, maybe 10, 15%. So what I put in stable coins, well, at least I get 9% to 12%, depending on where I put it. And then Masterworks is a pretty good, you can buy fractionalized shares of artwork, because guess what? These multimillionaires, they don't really care so much about the global economy because they're so rich. They want a Basquiat. They want a Banksy. And they don't really care how much they got to pay for it. And they'll pay for it. And then you get your fractionalized shares. And then, like this house here in Puerto Rico, we travel. And of course, when we're not here at this house, what will we do with it? Well, it'll be short-term rentals, Airbnb, Vrbo, which is the same type of thing for our houses in Texas. And then also that one part with Amazon, it's not the stock Amazon. I mean, it's a good play if you want to do that, but that's just for my Amazon business, which is a pretty simple thing. You just, in all honesty, you just say, hey, what kind of manufacturing do you guys do? Great. Well, give me a price phrase for that. I'll take a look at it, and then we will buy so much and then ship it over to Amazon. And then the other part was staking with crypto, because, I mean, if you want to really not easy way, I shouldn't say like that. If you want to, I can't even say stable. If you want a somewhat reliable way to actually get some type of income or revenue stream, I think staking is a pretty good way to do it. I'm not talking about crazy degenerate DeFi projects that might rug pull you. A little bit more established types of things. So that it just kind of balances everything out, and then you're not playing so risky like putting 100% into Doge. I don't know.
Yeah, well, for sure. And I don't think anybody watching our channel is kind of going in that direction. We have a lot of people in the gaming and metaverse sector. Then we have a lot of traditionalists in crypto that really kind of go in this direction. The lean in on stablecoins, though, we're finding seems to be more and more evident. A lot of people shifting cash, moving more and more into stable, concerned that we're going to see continued devaluation of the U.S. dollar. Especially on the global stage, if we do get into more heated conflicts, the potential for the dollar value could be at bay here in terms of other currencies starting to become maybe a reserve currency. I know China obviously trying to do that with the digital yuan.
Yeah, right.
When you look at the array of stablecoin offerings that are out there, primarily from a parking position, so there's a handful of places. You've got Voyager out there paying a nice reward. You've got Crypto.com, Celsius, Nexo doing some crazy stuff. Where do you see the best opportunities there? Are you trying to stay with what's the criteria of you saying, okay, I'm going to put a nice block of stablecoin USDC over in this particular place?
So I only go to places I trust, because it's hard to build up the trust, especially in this space. I've had no problems with Voyager. I've had no problems with Celsius. BlockFi just got dinged for $100 million from the SEC. I don't even know if you put any of your crypto in there, even in stablecoins, if they'll give you a yield. And then Nexo, I think it was the same thing. They put out a press release and said, "Hey,
Right, they backed off.
Crypto, yeah," and which is fine because they don't want to pay $100 million like BlockFi did. So why would they do that? So the thing that I'm wondering, and I actually I was on Twitter Spaces with Alex Mashinsky. I asked him this question. I go, how can you guys be sure that the same thing's not going to happen to you that happened to BlockFi and also happened to Nexo? And his answer was pretty simple. It was the standard canned answer, which is, we work with regulators and so, well, sure. But the other part, he said, was the problem sometimes with some of these offerings is they go too far ahead and they look down like, months down the road or years down the road, and they give these crazy offerings that are just very longevity. He goes, we just pretty much go like week to week. And that's pretty much it. And that's all we can really do. Because if we overstate things, he goes, I think that's when the SEC will come in and get to us. I also had Steve Ehrlich from Voyager on, and he said pretty much the same thing, but he's like, look, he goes, when I was a CEO of E-Trade and then Lightspeed, it was the same type of thing. There was a big issue with regulation, so we just stuck close with the regulators. I'm like, well, if that seems to work, didn't work out too well for Coinbase when they went in and tried to sit down with the SEC, but if it worked for you, sure.
Yeah. I think that is one of the things, because we have a lot of viewers and listeners that ping us about that very issue: is where's the best place to park? And I'm like, listen, it's a little different than the bank industry, because in a bank, most of the time you lock up a bank and you're probably there for multiple years. What I've found in more and more in the crypto space is you need to be fairly liquid and have the capability of moving assets at a moment's notice and be able to do that. So you have to pay a lot more attention and watch what's happening out there in all of these different platforms to really stay ahead of it. I mean, if you were in Nexo, the situation was they just shut off the rewards to new US customers, but the ones that were there, they grandfathered in. So I guess there are some variation points with that. Beyond that, and you think now from the stablecoin aspect, now let's move over to a few, critical but yet also very important blockchain projects, and one of them being Cardano. And I know you guys have a little bit of involvement around Cardano. What are your thoughts on kind of the future of where Cardano is going?
Well, first of all, people love Cardano or they absolutely hate Cardano. It seems like there's a clear dichotomy between the two. But I did see that there was an on-chain analysis from Blockworks, or one of the on-chain analysis companies. And they said over this time, February 2022, this is over the multi-year period, go back in 2018, this is the time when they had the most people lock up or hold their Cardano for 12 months or more in a time frame. So what does that mean? That means that even if you have people who are like, well, the price is going down, or there's a lot of ambiguity about what's going on, those people still are like, you know what, we don't care, and we are going to just hold on to Cardano. And there is some real power in that as far as like the price. Now, I think today it may be a little bit different, because I think a lot of people got scared and everything went down across the board. But this was just yesterday. So I'm like, well, if you have those types of people when the mentality is that diamond hand strong or strength, then that's bodes well for the project. The only thing is, can the project deliver? And can they actually get a DEX that can work? Can they throttle things? Can they get this Hydra out? Can they get the pipeline and actually make it actually work to where it's supposed to, transactions per second and finality? That's where it really comes down to. And they've done I got to tell you, they did a fantastic job with staking. I've never had a problem with staking. We have our own stake pool, and it's like the most seamless experience that you can possibly get, depending on the wallet that you use. I will say that.
Yeah. Just for our viewers and listeners, you can jump over to Dan Teaches Crypto. I'll bring up the screen here because he does have a staking pool.
Hey,
how does that work with you on this, Rob? What is the process for someone who says, I want to stake with Rob's pool?
Oh, you cut off for a second. The question, I think, was, did you say, how does that work?
Yeah, how does that work if I want to stake with your pool?
Very simple. So that what you just pulled up there at danteachescrypto.com, when you go to staking, click on Cardano, and this video will come up. And you can scroll down the same videos below. But all it's going to tell you is going to say, look, here's what you want to do. You want to download one of 3 wallets. You can download Daedalus, which is the whole blockchain, Yoroi, or ADA Lite. And then I walk you through the whole process of, first of all, what's the difference between proof of work and proof of stake? How does Cardano staking differ from like an Ethereum or other types of proof of stake? How you going to actually do it, the rewards that you're going to get, and then so on and so forth. So it's about 18 minutes or so, and it's very easy. I personally prefer Daedalus, even though you have to download the whole blockchain, but it's stable. You can use it very easy, and like it's very seamless. Yoroi, nah, I don't really like that one, but I keep it up there because people seem to like it. I have no faith in it. But ADA Lite and Daedalus, not too bad. And then of course there's another one called Nami. That's an up and comer, but those are the ones I recommend.
That's the one I use is Nami. We did that with some assets that were Cardano based and I was pretty impressed with it overall. Is this a pool that you're continuing to see grow? What is the kind of the numbers?
So there's a big discussion about multi-pool owners, and there's some people that say to keep the decentralization nature, you shouldn't have more than one pool. And some people and some groups and some organizations, they have like 9, 10, 12 pools. Okay. Yeah. So for ours, we have 2 pools. And the reason why we did that, because the saturation point when we started, it was at 64 million, which it is still today. And it was supposed to, we thought, was going to change to 32 million. So we just put 2 out there in case so we didn't get saturated. Because if you get saturated and people are still there, they lose the rewards. Well, that didn't happen. So we were actually picked up for the Sunday swap scoopers. So you could actually gain ADA rewards and Sunday rewards by staking to DNews 1 or DNews 2. And we saw a big uptick. We saw, I think on one of our pools was 85% saturated and the second pool was 50%. So pretty good. But then after that stopped, then there was a campaign. We even talked about this on our show, which was, hey, if you don't want to be at a place that has 2 or more pools, go someplace else. There's a lot of single pool operators and you can help decentralization. And people did. So right now, I think pool 1 is about 50%. I think pool 2 is around 35%. So if you add that up, that's 85% saturation for one pool. So still within the parameters.
So, okay, so I want to go to the Cardano chart because I'm kind of curious on your opinion here. You've had so much experience around it, but it's currently trading right there at what, 80 cents. This is the 1 year with log on, and I'm looking at, obviously we see the high up around 290, which has kind of really been, the big push when we saw it back there in what was that?
Days.
August. Yep, those were the days. So what are your thoughts on this? Is this something that if you are a Cardano lover, this is where you continue to add to the bag?
So, well, I mean, this is the thing. The place where you make the most gains is in times like this. Remember, not too long ago, there was this time, it was March 2020, and there was this virus that came out. It was called Corona. I don't know if you guys have heard of it.
I remember
but it was pretty big. Yeah. And at that point, Bitcoin crashed below 5,000. Yep. You had Ethereum roughly below $200. Cardano was like 6 cents. And if you were just like, well, I don't know what's going to happen tomorrow or next week or next month, but I got a pretty good feeling that in maybe 1 to 2, maybe 4 years, this might come back. It might go from 3,000 to maybe 6,000. Maybe Ethereum will go from 200 to 400 or so on and so forth. And those are the ones that made a ton of money at that point. I'm very jealous. And at that point, what I do at those points is what's called dynamically try to dollar cost average. I dollar cost average. It's the same buys every single day. It's executed by Voyager. I buy the same things. But then on days like today, I kick it up a notch and put in 10% more. And then if it goes down even more, I'll put in 10% more, or maybe even 20% as it goes down. And that's, I think what people have to remember is that it's scary, but this might be just a blip in 3 or 4 years, or it couldn't. Who knows? I'm not here to give anybody financial advice, just financial opinion, but in the long run, usually works out just dollar cost averaging and buying as time goes on.
Well, I look at it this way because this is the first thing that came to our crypto pit this morning. How does this Ukraine scenario play out within my group of friends? Everybody's talking about this early this morning, and I pointed back to the same chart, and to your point exactly, I pulled it up on screen right here. This is the day right here, March 13th. 2020. This is when Cardano was 2 cents. Now you
Oh,
look at
2 cents.
yeah, 2 cents. You look at the growth right there, right after this is pandemic. This is when the world thought that the zombie apocalypse was coming. Okay,
Oh, yeah.
so I look at it in the same. I don't know. Not that I'm saying that the Ukraine situation isn't a global huge problem, but a zombie apocalypse that can take over the entire world, that's a pretty big deal too. At that time, that's what we were thinking. You know, you have to
Yeah.
put yourself back in that era of time in 2020 in March, when all the airlines shut down worldwide, when countries started to close their borders, when all of these things started happening, and Cardano goes from right here at 6 cents, drops to the bottom at 2 cents, and then skyrockets within within 1 year to $1.35. So I look at that and I think crypto in the same sense. I feel very bullish in the sense of acquisition, dollar cost averaging, in the sense of I still believe 100% in digital assets and where that's going to go. So I do think this is going to be a blip. Hopefully I'm right and this gets resolved somewhat quickly. Even if it's done and resolved within the year, if we see good progress, I think that's going to point in the right direction. But man, Cardano's looking pretty good right now at let's see here, trading again
Looking
at
pretty
80
good.
cents. Yeah, 80 cents.
Yeah.
Could it go down further?
Paul,
Sure, yeah.
Yeah, it could. Let me show people a flip side of that. And
Yeah, please.
this is why it's so important to do your own research. Can you do me a favor? Can you pull up a cryptocurrency called SALT?
Got it.
SALT.
Let me pull that real quick.
It'll be very low. And then while we're waiting for this, oh yeah, it's pretty good.
There you go.
9 cents.
All right.
Can you do me a favor? Click on all.
Boom.
Yeah. So I want people to notice something about this, because there's a lot of talk about, well, if you just dollar cost average and everything will work itself out. It can. Most part it will.
Yeah.
But it's important that you choose the right project with the right people that have a real utility, and the tokenomics aren't awful, and the team is at least halfway decent. So SALT, if people don't remember, it was a very hyped cryptocurrency back in 2017, and it was supposed to be the next lending platform. Problem is, they had a problem with internal teams. They had a problem with the SEC. As we know, Ripple's going with that right now, even though they're holding strong. And there's other issues along the way. So even if you said, you know what, I believe in SALT, but generally take a real big look behind it, you're losing money right now. You're losing a boatload of money, even if you dollar cost average in. I don't care, because I think the top was $15, now we're at 9 cents. There's another one called Dash. And you can pull up if you want to. And I always talk about this. If you're thinking about like, all they gotta do is dollar cost average all these projects, no. And I always say it's called the Dash of SALT. So remember that when you're thinking about like, oh, I can just DCA my way out of it. Sometimes you can. Sometimes these projects are not that great. And here we are. So Dash, not to cause shade at anybody, but take a look at all.
That's it. That is all. Yep.
That is all. So look all the way back in 2017.
All right. So here we are in 2015. There's 17 coming up right there.
Yeah. So you could say like, you could dollar cost average here, but it's roughly the same thing that you were in 2017.
Yep.
So you're essentially buying it all the way through. Not that it's just some awful type of thing. It's a less of an example of SALT, but it's one of those things where you say, do I want to just hold something that really just moves sideways the whole time, or do I want to get something that actually appreciates? So
yeah, for sure.
It's one of those things.
Well, I look at it, this is something we coach on our channel all the time, is really diving into the research of understanding what you are investing in. But I look at this a lot like what Silicon Valley was in the days of you're investing into a lot of potential. You're throwing a lot on the wall, hoping that some of it sticks. And it's kind of the scenario of, is there 1 or 2 unicorns in that group that you're going to invest in? Because you can't call 100% of those calls every time. And the likelihood is, let's say that you had 10 and SALT or Dash was 1 or 2 of those 10, but out of those other 10, you had Ethereum, and you had maybe Avalanche in its early stage, or you had Cosmos. Then it starts to change the game, because it's a game ratio, just like any investing. Same thing in stocks. The only thing that's different is anything that's a volatile market, whether it's a business startup, a stock market, a crypto project. I think the same for me, the strategy is still the same. Invest in the founders if you know who they are. Hopefully, that's the first thing, is you know who they are, and
Yeah.
look at their technology, and then make a decision. Do you like what they're doing? And if you do, then you have to make that decision and say, okay, I think this has a future. Let's jump in it. Helium is a good one that I talk about often here. I like what they're doing. I think this is a future of where grid and mesh networking will go. That's going to maybe change a lot of things. And we'll see more and more of those kinds of projects continue. But at the same time, man, there's some real dogs out there too that we have invested in, and we know it. But it's like you got to kiss a lot of toads to get to the right one.
True.
And eventually you're going to find a prince in the crowd, and those are the ones that are going to 1000x you for sure, and kind of going in that direction. When you get a newbie in the space right now, what is the number one thing that you try to help them understand first?
Oh, understand that this isn't traditional finance, and that swings of 1% to 2%, which will be devastating for the traditional market, is really, I mean, we call that a Tuesday at 9 a.m. That's not a big deal.
Yeah.
So you have to understand that it's super volatile. Also, you have to understand that it is an asymmetrical investment. And just like I said before, even though you hear about all these Dogecoin millionaires, you can, like I said, you can do that, but it's not very common. It's uncommon. And what you need to do is just, if you really want to be safe, the safest bet out there, even though you're not going to see some massive returns anytime soon, but it is Bitcoin and it is Ethereum. And you can get into like the Cardanos and the Chainlinks and the top 20s. And I will say this, even if you look back, if you go to CoinMarketCap, they have a historical graph that you can take a look at, and you can pull up like January 2015. If you look at the top 20 there, it's just Bitcoin. If you go to 2016, it's like Bitcoin, I think XRP, and then some, I want to say, I think Ethereum was around there. But and then it just changes around the way. So if you look at that and go, okay, which is the one that is the least volatile or the most volatile markets out there? It's probably some of those.
Yeah, for sure.
And then of course, then I say, if you want to be a degen, then just go whatever you want to do, but do that like 25%, 75%.
Exactly.
Yeah.
High risk is always, I've done it before in businesses. I've taken high risk and invested in high risk companies, and 1 in 10 of those pay off for me. But the one that has paid off for me out of those 10, usually, wow, that really paid off for me. And it was enough to kind of offset my losses in other projects. But I would have never found number one had I not gone through those others to really, vet out all those projects and understanding where they're going. So kind of interesting. I want to talk to you about Voyager real quick, because with Voyager, you and I are kind of on two opposite sides here. I like Voyager. I'm still a big customer of Voyager, but I have not been a fan of the Voyager token. Where do you see that one going? I mean,
we're on the same level.
But we're on the same.
No, we're on the same level there. See, the thing. Well, let me back up and say this. I did a price prediction not too long ago, and there was very few that were correct. I will just tell everyone. And I was totally wrong on Bitcoin. I wanted to say it was 150,000. Didn't hit that whatsoever. Ethereum, I thought 10K. Didn't hit that. Cardano, I said $3, and that actually worked out. Chainlink, I said it was only like 25 or 35, and that actually hit. But one of the biggest dogs I had, the worst one, was Voyager. And I did this price prediction video, was January 11th, and it was 29 cents for Voyager token. And I go, you know what? Because it had a max supply. It wasn't too much. I think it was like 222 million. And I said, this is just coming out. They've got a pretty good base. They got they're really growing in America. They have this acquisition for these LGO tokens. They're going to merge over to Europe. It's going to work out pretty well. I think it's going to go up to $30. People are like, you're insane, which really I kind of was. But then it went from 29 cents to $7 within 3 weeks. Everybody's like, not so crazy. And then it went from 7 to 5, then 5 to 4, and 5 to 3. And so this whole token, what happened? Well, this is a problem. And even I've talked to Steve about this, from the CEO of Voyager. He's like, the loyalty program, we tried our best, and it just we need to rework some things, and we need to just take it from the ground level and maybe tweak what's happening. I think the problem was the loyalty program itself, and then they raised the max amount. And that's never ever good to say, well, we're going to go from 222, and then we're going to merge with these other LGO tokens, and it's going to bring to this, and then we're not, we'll talk about burning, but maybe later. And I was like, there it all goes. So when I talk about Voyager token, yeah, I'm not really excited about that. However, there is one saving grace, and that is this. They have 3 levels. I wish they would drop the amount that you can hold for Voyager to get the top tier level. Hopefully they
Yeah.
do that. But every trade that you do, you get 1x, 2x, or 3x back. You get more for the yield that you gain, because most of the, not most, but a good amount of crypto that you hold on Voyager, you get between
Right.
whatever, 2% to 13%. And that just gains the actual yield. So the more Voyager tokens you hold, the more you get back in yield. Also, you get the debit card and all those things whenever that rolls out. So
Yeah.
right now, I'm not super ecstatic about it. But again, I like the team, I like the people, and I think they'll figure
Yeah.
it out at some point if they want to move forward. He was already the CEO of E-Trade, Lightspeed, figured it out. I think he'll be okay.
No, I think they have a future. My concern
Yeah.
is that when you get a competitive landscape that's coming up around you so quickly, it changes the, kind of the course of how CEOs respond to certain things. One thing for me is the UX and the app itself is not really advanced, which it really needed to. The debit card needed to roll out, it did not.
Oh yeah.
We've seen with crypto.com, those kind of things. So I am still looking at Voyager in a kind of glass half empty right now, as opposed to half full. I hope that they pull it together. I'm always curious about others' thoughts on these, because these platforms are very important on newbies getting into the market, understanding which way to go, whether you go KuCoin, whether you go a Voyager, a crypto.com, all the different variations that you can.
I got to tell you, like, I think centralized exchanges have their spot, but I think in the future, they're not going to be as prevalent as they are right now.
Right.
Decentralized exchanges will probably rule. It's just the problem right now is if you go to a DEX and you're trying to do anything on Ethereum, have
Yep.
fun with the gas
Yep.
fees unless you're working on Polygon.
Yeah, for sure. All right, last section of questions, and that is your Metaverse portfolio. We talk about the Metaverse here a lot. Everybody wants to know, what is Rob holding in the Metaverse?
Well, there's better people than me to search out for that. Go watch, of course, watch Paul, but watch people like Crypto Stash and those guys. Those guys are really in the Metaverse. But for me,
Yeah.
the basics that I understand it, I like the revenue that incomes just from just owning something, like staking, those types of things. So like for me,
Right.
if I own land parcels and in these Metaverse plays, and I can actually gain some kind of yield from that, that works out pretty well for me. So like there's a couple of games that I'm not a gamer, but they make a lot of sense because they have a lot of following. One is Avogacci. I think that's going to be a very big up and coming, especially when they start to launch the land. And also, just like you have Axie Infinity, where you can loan out your Axie and people can play, they're going to do the exact
Yep.
same thing.
Yep.
So there's that one. There's also Genso Kishi, which I have talked about on my channel many times. They already have had a product called Elemental Knights. It's been a game for like 6-7 years for free to play on iOS, on Android, and then of course you could buy it for Nintendo Switch and PlayStation. They took that kind of team and they brought it over to Genso Kishi, which is going to be a Metaverse play. That just launched the actual token acquisition, and now they're going to be buying up land, which I'm definitely going to do. And then also there's another one from Chain Guardians, and that's called Cryptoverse. And I think it's pretty big because they have a pretty good team behind it. They want to do 3D, and then also the big thing for me was that they didn't just base everything on Ethereum because it's way too expensive to do those things. All these plays are on Polygon. And if you can do something like that, then the fees are lower and it makes a lot of sense. And then lastly, like I said, if you can get the land and the parcels and it can generate yield from you from people who are playing on it, what's the difference between that and this?
Yeah,
Not a thing.
exactly. Sure. No, I would agree. I think land is going to be a critical component in the Metaverse overall. Obviously, the projects that I go after are some of the more stalwarts that we talk about, whether it's Axie or Sand.
Oh yeah.
Even Mana to a certain extent. But then there's a ton of new games and new entities out there that are really kind of rolling in that direction. One thing that I have found, and I'd love your opinion on this, Rob, is when we do our deep level research on these projects, I find a lot of these projects are very hesitant to reveal their developers and reveal their people. And I'm like, I just
Yeah.
don't understand this. I don't get this. If you're trying to do something on a global stage, why would you not want your team out there in front?
So this is This project will remain nameless, but it's
anonymous.
one that I still have yet to do a deep dive. And I
Yeah.
asked them, I go, hey, this is good. Everything's coming together. I read the white paper. I took a look at what I call the UTT, the utility. What the hell does it do?
Yeah.
The tokenomics looks like you're not going to dump on everybody. And then the team looks pretty solid, but I couldn't get your developers that, either on LinkedIn or on the website or wherever it was. So can you, like, they're like, no. I'm like, why not? And I was like, are you just not telling me this because you have bad developers? He's like, no, you don't understand, because like we don't want to get our developers poached, because developers are like gold.
Yep.
And if we divulge who they are, then another team will steal them away. And I was like, that's not even real. And then of course I was collaborating with some other projects that I've done. They're like, yeah, that's pretty much true. But a lot of these projects that I've been dealing with, like we pay our developers a boatload because we know how valuable they are.
Listen, I'm going to tell you right now, if somebody's holding out their developers because they think they're going to get poached, they're already behind the game, all right? Because any good HR executive can go find the dev team behind anything. All you have to do is jump into the source code. You start to develop and understand where these signatures are coming from. There's so many different ways to do that. That is such a lame answer. They're hiding something. That's what's happening. They're hiding something. Somebody's not telling you what's up.
Yeah, it's either that or like, I'm like, if you want to just retain people, pay them what they're worth. And if it costs a lot, you're going to, trust me. And people say cash is trash. Cash isn't trash. Cash still attracts a lot of people, and it can be used pretty well when you want to do things. And if you want to get the developer that you want, here's what we're going to pay you. And that's what it is. But that's just me talking. I don't have to deal with them.
Yeah. Do you think we're going to see real development in the metaverse in 22 or 23? And I see that we're going to see some adoption because it's the cool thing for the cool kids. It's 2007 social media. Everybody says, I want a place over there. But real movement in social media, where we saw it become a behemoth in terms of ad revenue and all the things it does, didn't really happen till around 2010, 2011, about 3 to 4 years into the cycle of social media. What are your thoughts on Metaverse for that? I'm looking here at the top by market cap, Decentraland. I just want your opinion on these, that if you were going to look at Metaverse plays, and when I say a Metaverse play, I tell everybody that you really should be looking at a 5 to a 10-year window, because this is the kind of evolution that we're going to see in this space. But if you look at Decentraland, Sandbox, Axie, Theta, which is really going after the engine, WaxP from the NFT side. But anyway, I'm going to run down the list here. You tell me if you like them, and you don't have to say if you'd buy them or not. Just have you researched them enough to like them or not like them? What do you think about Decentraland? Is this a like or not like?
First of all, I own it, so I like it.
All right. Okay. Sandbox, of course, I'm sure we agree on that one.
I own it. I own Sandbox and I have land, so of course I love it.
You're all in, man. Okay.
What about I have 2 parcels?
What about? Gee, I love it. Rob's estate.
Rob's estate, and I did a video and I showed you how to actually get in there and break it up to where you could find these parcels that are together, so it'll be more valuable. And it's a very just simple filter. Okay, but Axie Infinity, no, I don't even get it. No, I don't. I never got into it. I think I missed the boat on that.
Okay, what about Theta? Well, you could get in now. Axie's really low. You're sitting at $46 right there. What about Theta?
Theta I've been with for the longest time. I bought them a long time ago because I believed in the idea that we were going to get away from storage, and of course Dave Chen from Google was the advisor, so I'm like, yeah, why not?
Sure, yeah. Engine Coin, thoughts on that one?
I own that. I own it. I think it'd be interesting to see how you can actually move your NFTs between games. That's what I see Engine potentially doing. And
we talked shortly on WaxP. You like or no like?
You know what? I don't own it. I used to own it a long time ago, but I don't own it. But have you ever tried to mint on that? It's super cheap and it works out pretty well. And a lot of big companies use it. I don't know why it's so low. I just don't know.
Yeah. And then rendered token. What are your thoughts on rendering in the cloud?
I have nothing on that one.
Okay. All right.
I have nothing on render.
Good. Well, I mean, this is a good lineup. I mean, that's kind of the big top 10, but good to understand you're getting out there. Do you find more people that are asking you more metaverse questions, or do you feel like people are still in the traditional crypto product?
I think people hear about it. It's like, Rob, what's the metaverse? And I'm like, well, if you want to take a look at it, if you want to kind of understand kind of what it is, look at Ready Player One. That's kind of like what we think it's going to be. But
Yeah.
I'm going to tell you right now, the way that we think technology is going to be right now to what it actually becomes in 10 years is probably going to be vastly different. I remember
Yeah,
us talking
sure.
about we were going to have self-driving cars just around the corner. And of course, besides a Tesla, which really can't do it, and there's still accidents, I don't see it happening. Also, we're supposed to have flying cars. That didn't work either. So if you think that it's going to be the same thing, I don't think it's going to be. It's going to be another direction.
Yeah. Interesting
So
stuff.
to
Rob,
answer, sorry.
yeah, no, it's always fun talking to you. I love to dive in with you on occasion. It's fun to kind of get your input and really kind of, especially around this time right now where we see the markets in a little bit of a struggle. But thanks for stopping in. We appreciate it.
All right, thanks for having me. All right, see ya.
Excellent. All right, you guys are tuned in over on the podcast right now. We love you guys. Thank you again for the kudos over there. Best thing to do is jump over here to the YouTube channel. It's where you're going to get all the juice, all the additional interviews and some of our analysis that we break out. Of course, you've got to join the Diamond Circle. We drop an email to you. We do some digital asset rewards, and then we also give you some additional aided content on different things from guides, reports, all that kind of cool stuff over on Paul Barron Network. So just click the link below for that. If you want to reach me, it's out on Twitter at Paul Barron. We'll catch you next time right here on TechPath.